conversation that we're having. Caplin Point is a stock on our radar. Caplin Point is a pure play injectables company, and that's in focus after Gland Pharma and Aurobindo Pharma declared that they would be hiving off their injectables unit into a separate arm on possible value unlocking for shareholders. Will Caplin Point be also doing the same? What are the prospects as far as injectables is concerned? We have Vivek Siddharth, the COO of Caplin Point, who joins us now to talk about that. Vivek, thanks so much for joining us. I want to talk a little bit first about Caplin Steriles, which is your injectable arm. Any plans on listing that, unlocking any value for shareholders, and what kind of opportunities do you see?
Yeah, see, it's a little early to discuss on the next course of growth for Caplin Steriles. Obviously, we've just hived it off into a subsidiary in the last 18 months. All options are on the table at this moment. There is an investor, he's a long-term investor, it's a private arm of Fidelity. And in about a few years' time, I think an exit for them is an obligation. But at this moment, all options are on the table. We'll have to see how the entity continues to grow and thrive, and then we'll look at it in a few years from now.
Okay, that's interesting. Good morning, Siddharth. Can you tell us what is this few years that you referred to? When is their exit option on the table? As well, what are the relative revenues of the entire unit and Caplin Steriles?
Okay, so even today, the major bulk of our growth continues to be in Latin America. Today, Caplin Point's overall sales have reached over 1,000 crore. We're at about 1,060 crore, of which 90% still comes from Latin America and parts of Western Africa. US is about 8% at this moment. We do expect US to grow in the next few years. The public statement, of course, that we've made is that we expect to double our Latin American revenues in the next 5 years, and US to reach $100 million revenue by 2026.
Okay. The other important question is why aren't you venturing into vaccines?
We looked at this area a little bit early, I would say, last year. The thing is, vaccines and pharmaceuticals, basically chemical medicines, cannot be manufactured in the same facility. So we didn't have exactly a facility that was ready to go at the time when capacity was required. We don't close the door on that one, but to be honest, we have a lot of expansion ideas on our plate, and we don't want to stretch our bandwidth too thin at this point.
Okay, in fact, I was coming to that because you do have cash on your books, around 500 crores on the books of Caplin Point, and the parent company has about 300 crores or so. You said you have expansion on your mind. So how do you plan to utilize that cash over the next, say, 1 to 2 years? And will it be purely for expansion or anything else?
Yeah, so it's actually it's more than 400 crore in the parent company. Today, we've taken on a couple of expansion plans. Number one is we're getting into oncology. This is a space that we wanted to get into for a few years now. And now that we've built up a good cash reserve, I think we're in a position to take on oncology. And it has to be in a dedicated unit. We've already acquired the land and buildings for this one. Number two is we're getting into backward integration on API as well. We want at least 60-70% of our ANDAs in the US to be backed up with our own API at some point. And the last one would be, I would say, we are expanding capacities in our existing markets because our Latin American markets continue to show very strong growth, and we need to be in a position to cater to that demand as well. So when it comes to your second part of the question, we don't say no to anything organic, but it has to, inorganic, but it has to sort of fit in with our line of growth, and it has to make sure that it makes sense for the overall company per se.
Okay, so well, you really posted good growth in FY21. Is this repeatable both at the EBITDA level?
I think we've posted good growth in the last few years. I think we have a CAGR of well above 30%, and going forward, I think 20% minimum, I think, is guaranteed. If we're lucky, I think 25% is still doable. Our EBITDA is probably at a good rate right now. If anything, I would see our EBITDA strengthening from here and not the other way around, because our Caplin Steriles business is still in the red because we expense out all of our R&D and filings and stuff. We take a much more conservative approach on that front. So once that starts to break even at a P&L level, I think you will see our bottom line strengthening significantly.
Vivek, actually, we've run out of time, not out of questions, but pleasure speaking with you. Thank you very much indeed for joining us and giving us some idea of, whether you're going to list and what will be the timeline approximately. Okay, so it is maybe sometime at a distance on the table. Thanks a lot for joining us. Okay, so that's a company that's growing very strongly, and we do want Prakash's views on that. But for the moment, we are out of time. We have to take